Hi, everyone. Welcome to Market Insight for the week of October 23rd through the 27th. Hope everyone's doing well. Helen and I are off next week, so I'm doing Market Insight a little early this week. In fact, I'm doing it just around the close Friday. So we won't really talk about the monthly this week. It's not really telling us much of anything except the way the monthly currently looks. It's threatening, obviously, but we have another week and a half to go before this monthly is over. And it's going to be the smaller time frames that'll tell us if we're going to start holding in here or not on the monthly. So let's go to the weekly. The key feature on the weekly chart is that we are trading right around significant support. So we've talked about this recently, but it's worth reviewing. We have weekly demand lines here, one larger demand line here, and another one. We have a downtrend channel, but this is still a demand line. And we've got two demand lines converging with one another. Excuse me. These demand lines are also converging with horizontal support at the 4208.5 level. We have a horizontal support. And this is also an important access line area. Started as support back in late winter, early spring of 2022. Then it was resistance that following June, and again in August. This is made the August high here of 2022. Then again in December and in February 23, right? Then note the absorption during the spring of this year. And then we push up, and now we're coming back on top of that. So we talked about how this area was likely accumulation over here. And there are projections. If that's true, there's projections off of the point and figure chart that run up to the all-time highs here of 4808, and larger counts that go significantly beyond that. So, and also this is the halfway point between the low here and the high. The low when this really started to take off. I mean, there's a bigger halfway point, but I thought that was more appropriate here. So anyway, all this stuff is converging together here, suggesting pretty significant support in this area. And the question we have is this going to hold or not? We don't just assume that it's going to hold. We want to see it either hold or break, and we'll see it, and we can tell what it's doing as it's doing, or close to as it's doing it. Now, one way to look at this is from the perspective of the jump across the creek story. So the jump across the creek story is about a Boy Scout. I'm not going to be good at doing this, but a Boy Scout who is trying to get to his camp, which is over here. But every time he comes up to this creek or stream or river that's lying between where he is and the campsite is, that creek or that stream or that river is just too large to cross. And so he's walking around, comes up to the creek, again too large to cross here, again too large to cross. But at this point, the Boy Scout comes to this, and it's still too large to cross. But he comes to this point in the stream, and he can see a little ways downstream. It's clear down there, and he can see that this creek might be just narrow enough to be crossed. So he decides to retreat a little bit. so that he can get a running start and gain some momentum so that he can, take off, run, and jump across the creek. But he comes up to the edge of the creek and realizes, whoops, it's still too wide here to cross. And even with, even with getting momentum behind him, it's still a little too wide to cross. So he starts probing, looking for a more narrow spot to cross, and finally finds one, and gets up past the creek here. And so after he's gotten past this major obstacle to getting to the campsite, this creek, he realizes he's tired and he's hot and he's sweaty. And so he decides to return to the edge of the creek, take off his hiking boots, dip his feet in the water in the stream or the creek, and cool his feet before heading back on up to the campsite. Okay. So that's the classic jump across the creek story with some embellishment by me regarding the absorption there. But the basic idea is that the creek is supply, right? The creek is resistance. It's where supply comes in this market. So as the market rallies up here, supply comes in at this point and pushes the market down. Market comes back up, supply comes in here and pushes the market and tries to come up here again, pushes the market down. So this is the line of resistance. It's not, we tend to draw it as a straight line, but excuse me, it's actually a bit of a wavy line. And it just represents the spots or the points at which supply came into the market, checked the market, and pushed it back down. And so, this, you can look at this and you can say, oh, climactic run somewhere in here, maybe, selling climax, and then the I don't know if I'm looking at it now. Yeah, let's say it's selling climax, and then automatic rally, jump, secondary test, a higher level secondary test, a sign of strength because it jumps across the creek, another secondary test, the absorption, then the jump across the creek. And now it's the backup to the edge of the creek, okay? And then these secondary tests, these form a last point of support in here, one here and another one here, last point of support. And you can take from a last point of support, you can go all the way back to, that's why I was hesitant here. This might be preliminary demand, right? The selling climax, secondary test in the form of a terminal shakeout. I like this better. And then these are secondary tests with the last point of support here, last point of support, and then a much higher last point of support. But this is the key one. And this would make more sense to me. So you can take a point and figure chart across here, and that would project up to, when we've taken a 1 point and figure chart and projected it, and it goes up at least to this level, a little beyond. And it's only taking account in this area here. We've got all of this to go. So as I said, there's a fairly significant count. So that's the jump across the creek story, and it would suggest bullishness here in the market, and for this area to hold. Now, so the Boy Scout, let's look at a little bit larger blow up here of the weekly, so we can see what we're talking about. So the Boy Scout cools his feet in the creek, on the edge of the creek, before heading to the campsite, meaning that price is retesting that breakout before that breakout area here before heading higher, meaning support should be reasonably, pretty good here. Support should be good somewhere between 42.35 and maybe around 4,200. level here, 4,200. Okay, and somewhere in there, price should hold. And if price does hold in this area, then the implication is for higher prices, most likely up beyond the recent highs here that were put in during the summer at 46.34 and on up to retest the all-time highs at 48.08. But, and this is a big but, the Boy Scout can also fall back into the creek. Now, I'm not necessarily anticipating that, but that's certainly possible here. You can see on the weekly, we've got some supply coming in this last week. Now, it does stop here, and that's a positive with all this. So that suggests some effort to go down and not the kind of result that the sellers would like to have. That hopefully, potentially the buyers were checking that, but we still need to confirm that. We see supply, but some buying and then more buying, and then coming back down again, some pretty heavy volume. But is that effort versus result, or is that new supply breaking out? Truthfully, we really don't know. We're anticipating that it's going to be demand coming in here because we're at such significant support. But we may see this start to break down. We may see the Boy Scout fall back into the creek. And if the daily starts trading below 4,200, and it tips the odds, let's say, toward significantly towards lower prices. Excuse me. So we need to see buying emerge somewhere between the early October lows here at 42.35 and a half and about the 4,200 level. Let's turn to the daily chart. Look at this a little more carefully, or a little more in more detail. So we will see buying or the failure of buying to emerge first on the daily, right? And we'll watch price carefully in here as it interacts first with this 42.35 level. And if this fails to hold in here, then the next level down, I don't have it on the daily, but it's at 42.08. Okay, if 42.35 fails to hold, the next level down is 42.08. Now, we did see some buying coming in at this level, we were oversold in the daily trend channel and all of that. So, I'm looking to see if we're going to see it here again. That's what we would anticipate, right? And we'd want to see a price action similar to that that we saw back in here if 43.235 is going to hold. But because that's a fair amount of supply in the last few days, if this area was going to hold, we might also see transition from supply, which we see here now, to demand, right? And maybe we're seeing a little bit less supply coming in. Maybe this is the very beginning of that transition. We don't know yet. But what would we look for? We'd look for things like what? Shortening of the thrust, some effort versus result, key reversal, no supply, clustered closes, right? Those are the elements. We look for one of those or more, preferably more of those elements that would form a story of transition that we could read, and that might form in here, right? We'll see if that materializes. Now, if the market decides to continue down, look for the same elements to develop around the 42.08 level, right? If the market decides to continue down to 42.08, look for those same kinds of elements, the shortening of the thrust, the effort versus result, key reversal indicating buying coming in, no supply or testing, clustered closes. Look for that down in that area, right? Now, if that stuff fails to materialize, And especially if we get wide spreads closing on their lows, sustained or increased volume, then that would indicate those support areas are going to likely to break, right? And lower prices are likely ahead. Now, if we get price action looking like this, going through this those levels, we've probably got lower prices ahead of us. Okay, and that's the difference. So we start to see this kind of stuff in one of these levels here, or down at 4208, or are we seeing this kind of slicing through? And those are the two things that we're looking for in kind of a fundamental or basic way. Okay. So yeah, and as I say, the widespread down, that would indicate, and the sustained volume doesn't have to increase, but sustained volume, but especially if we get increased volume, it means the Boy Scouts falling back into the creek and maybe in trouble there. All right, so let's take a look at the major markets, see if we can gain some insight here. Launched the NASDAQ early in the week. We've got 3 touch points here, pretty significant support. So the NAS is coming into significant support. We saw a good response off of that support before. Kind of expect some kind of positive response here, right? So we'll see that. Also, notice that the Dow is showing a little shortening of the thrust here, so potentially a little bit better, a little bit more bullish than the other markets. Maybe that's what is hidden in this, in the little bit less volume that we saw in the S&Ps. We'll have to see. But if this shortening of the thrust is some buying coming in or a lack of supply coming in the blue chips, then we may see the Dow penetrate this level a little less than the other markets, and maybe turn up more quickly than the other markets. Hold a higher low and then turn up quicker. So something to watch for early next week as we get down to this level. Now, I mentioned that Helen and I are on vacation next week. We're going to go off for a little bit of time off. So no deep practice next week. We'll meet again the following week on November 2nd at our normal time. Helen, I think, said to me that she posted a while back in the members area a schedule for, I think, both September and October and maybe into November. But all of that stuff is on there. So this is just a reminder. No deep practice next week. I won't be here. I'll be off at a conference next week, but we'll be back on Thursday the 2nd at 8 o'clock, our normal time. Now, one thing, just let me remind you that this past Monday, on the 16th, Monday that's already happened, we had a membership webinar, and we reviewed the second half of chapter 9, excuse me, in David's book. Now, this chapter is about tape reading and using the Wyckoff's original tape reading method of point and volume. And David's showing you the transitions that he made in this point and volume chart, Wyckoff's original chart, to get to the Weiss wave. Pretty interesting. And we learn a whole lot about how to read especially the intraday charts. In the markets. Really a fascinating study that Wyckoff, that David did for all of us as students of the market. So if you haven't seen that, take a little bit of time and check that out. So also, as I mentioned, we're going to suspend Market Insight for a week because we're not coming back in time. So I will see you all Thursday, November 2nd. Have a great week or so off, and I'll see you then. Take care. Bye-bye.